Hey guys, welcome back to Stacking Stocks, and thank you so much for tuning in today. As usual, we have super exciting content for you today. We'll discuss the latest headlines in the news about Tesla stock deliveries racing past quarter three estimates. If you're a Tesla stock investor, then you'll definitely find today's session quite interesting. You're probably already eager to find out what we have for you on Tesla stock deliveries. We assure you that you're not going to be disappointed. Stay tuned. Tesla reported record third quarter deliveries racing past estimates even as chip shortages possibly constrained production and deliveries. The stock also rose within a buy range. Isn't this exciting for Tesla stock investors? Many investors would get thrilled by such news. More deliveries mean more returns, which in turn assures investors of consistent stock dividends. We established that Tesla deliveries totaled 241,300 electric vehicles for the third quarter, up from 201,250 in quarter two and 184,800 in quarter one. As you can see, Tesla's stock deliveries have been improving over time. As a matter of fact, the estimates range from 218,000 to 246,000, with the consensus at 232,000 for quarter three. Do you know what that means? It means that Tesla surpassed the estimated numbers for quarter three. Now that's some good news for the EV car maker as well as for its investors. Furthermore, the EV giant delivered 232,025 Model 3 and Y vehicles in the third quarter, as well as 9,275 Model S and X vehicles. It seems like consumers went all in for the Model 3 and Y vehicles. We believe that maximizing these particular models could help the company reach even greater heights. But that doesn't mean that the other models should be neglected. In July, Tesla began long-delayed deliveries of the Model S Plaid, the revamped version of the luxury sedan, but those weren't expected to ramp up quickly. Quarter three production totaled 237,823 vehicles. That included 228,882 Model 3 sedans and Y crossovers and 8,941 Model S and X luxury vehicles. Tesla produced 206,421 vehicles, including 204,081 Model 3 and Model Y EVs, and 2,340 Model S and X vehicles. Can you now see how Tesla managed the record third quarter deliveries? We've also observed a massive trajectory for Tesla deliveries. To this point, we believe the chip shortage markedly constrained supply and deliveries in the months of July and August, estimating roughly 80 to 90,000 deliveries. But Tesla is still on a massive trajectory in the month of September based on our analysis that should approach the 145,000 to 150,000 range, with China a major swing factor. While logistics in Europe remain complex, given that most of the Model 3 and Y vehicles are coming from Giga in China, we had estimated that Tesla could approach 230,000 deliveries in the quarter. Tesla delivered the Model Y in Europe for the first time in the third quarter, the last major market for its lineup. Tesla's Shanghai plant exported the bulk of its July-August production of Model 3 and Y vehicles primarily to Europe. There were indications that Tesla had big local China sales in September. Well, things keep getting interesting for both consumers and investors. As consumers get more of Tesla's products, investors get assured of stock dividends. We believe that the pace of EV deliveries in the United States and China have been robust, with an eye-popping growth trajectory heading into quarter four and 2022. The chip shortage will take around 40,000 units off Tesla's annual delivery number, which should still approach roughly 890,000 to 900,000 in a bull case scenario. Now, have you noticed that we're leaning more towards a bull case scenario? That's because we believe many investors feel vindicated when the price surges. When it pulls back, they take advantage of the sale and add to their position. Do you think such a decision is naive? From our experience over the past years, the market and public respond to Elon Musk in peculiar ways. Before we look at Tesla's stock performance in the stock market, let's address some more recent events where the market has been drawing negative connotations on Tesla. First things first, let's talk about Tesla's quarter one earnings. The outcome was not welcomed by the market with open arms, but we believe there's a lot of good happening under the hood, which we'll attempt to decipher. The consensus for deliveries was between 168,000 to 178,000, depending on which data provider you look at, and Tesla topped all forecasts by delivering over 184,000 vehicles in quarter one. Now, this all took place during a period of semiconductor shortages that left other auto manufacturers like Ford cutting Q2 plant production in half. This is also the same quarter where Tesla produced zero of the Model X or Y due to part shortages and retooling preparations for the refreshed models. As you can see, Tesla has been performing well beyond the estimated numbers. Don't you think this is amazing? Let's get into other events where the market has been drawing negative connotations on Tesla. Some Tesla bears, like Gordon Johnson, have emphasized that Tesla only saw a mere quarter-on-quarter delivery growth of 2% from Q4 2020 to Q1 2021. What Gordon and others fail to mention, despite Elon reiterating this fact during the earnings call, is that automotive sales are highly subject to seasonality. What we're trying to say is that there is a seasonal trend in car sales, which always dips at the beginning of the year, making it all the more meaningful that Tesla managed to conversely increase sales in Q1. When seasonality is involved, any seasoned investor knows it's more appropriate to compare apples to apples by taking a year-on-year calculation. Now, comparing Tesla's Q1 2020 results to Q1 2021 gives us an astonishing year-on-year delivery growth of 108%. While Tesla is a fast-growing company and it is advantageous to take an earlier base period, year-on-year Q1 growth from 2019 to 2020 was only 40% for context. The bottom line is supply and demand are ramping up fast. Tesla should have no problem hitting the milestone of 1 million deliveries, with Model X and S returning to volume production and Texas and Berlin factories coming online. Have you noticed a development in Tesla's deliveries over the years? Well, what's the market reception? How have consumers responded to Tesla's products? The market was disappointed because of a perceived dismissive tone towards FSD or full self-driving, as well as a lack of explicit guidance. We believe much of the tempering of expectations for FSD or full self-driving was principally motivated from a PR standpoint due to the recent crash in Texas. Between the number of miles already ingested and progress on their Dojo supercomputer, FSD seems to be moving along just fine in the background. Be sure that we'll be hearing more on this later this year. As for guidance, while Tesla may not have provided explicit guidance, they did drop some particularly insightful clues on the Model Y. If Tesla fulfills this target, and we also account for the production of S, X, 3, and Cybertruck, for which there's already well over 500,000 pre-orders, they should have no problem delivering at least 2 million vehicles in 2022. This is almost double market consensus of 1.1 million deliveries for 2022, which poses massive upside as long as they stay on track. What do you think about this? If you're a smart investor who's been around for a while, you should be aware of Tesla's stock potential to surge even higher in the future. But the question is, how is Tesla's stock currently performing in the market? Did you know that Tesla's shares rose nearly 4% in early trading on the stock market? It pared back most of those gains to close about 1% higher. Tesla stock is on the buy range at $802.78 from a buy point of $764.55 from a cup with handle base. Its relative strength line is trending up. Tesla's RS rating is 86 out of a best possible 99, while its EPS rating is 72. With a composite rating of 97, Tesla ranks number 1 in IBD's auto manufacturers group. We believe that Tesla is a leaderboard stock. The company has more or less been proving itself in the EV market. For one thing, it's the global market leader in its core electric vehicle business. As the entire auto industry shifts towards electric vehicle manufacturing, Tesla is well positioned to ride the secular trend. It's also venturing into adjacent markets, such as robotaxis and driverless vehicles. Moreover, Tesla is led by Elon Musk, one of the best businessmen of our generation. Investing in Tesla is akin to having Musk as your business partner. You sure don't want to miss out on Tesla's good tidings. Once again, we're grateful that you tuned in today. Don't forget to like, share, and subscribe. Until next time, always remember to invest wisely.